Good day to one and all. This is Dr. Sivaram of iknowindices.com. I was giving between 11:30 and 12 GMT the pre-US GDP data release. The GDP data release was released. GDP data release happened by 12:30 GMT, and it was nominally higher than that of the expectation, in line with that of the forecast. As a result, you come across Euro and GBP started making the slide. So now you can understand the power of the forecast. But still, we will try to use the forecast, market reading, and also the trading technique so that we don't just like that risk the market. We take the calculated risk with a decisive condition so that we don't have any ambiguity with regard to our trading style. And we decide what sort of trade we are going to do, whether we are going to do a buy and sell trade or a sell and buy trade. And in the event if the market goes against what we are supposed to do, we have the trading strategy using the hedge. And in the event if the hedge is not filled, then we try to keep the stop at entry in the original position and remove the hedge order. Thereby, the hedge order acts like a stop which is not filled. Then we try to use the trailing stop in a profit making position and also a trailing exit order to maximize the profit. So we are going to review the results of the trades what I recommended during that of the part 1, that is the pre-US GDP data release, and also review about the market. As I explained, that the market is expected to make the swing and firm up and then slide during the US session. So now we are at 13 GMT, 13:02 GMT. It is a gap time between the US session, European and the US session. During gap time, they try to pretend as if the market is going to make a drop or the rise, and then subsequently do the opposite during start of the new session. So they are making a small dip. Now, in the case of Euro and GBP, during the gap time. So that means they will firm up little bit and come to the earlier level of another 10, 12 pips above than the current level, and then start making the slide during the US session. So US session, they are expected to make the swing and slide. So they already made the slide after that of the positive GDP data release. As I explained that they are expected to make a false rise or a firm up move by 12:30 GMT before that, and then slowly swing and firm up and then slide after that of the data release. So they are doing in the same way, and they are expected to again firm up a little bit between 13 and 13:45 GMT and then start making the slide. So now you will be able to understand how precisely for even 5-10 minutes we'll be able to give the forecast, how exactly the players are going to do it. And that is possible even for you, provided you understand the market timings and also follow these forecasts, what I am giving it. So when they are going to do the swing and slide, that means swing will be on the upper side, higher side. So they will slowly firm up to pretend as if it is going to just discount the US GDP data and Euro and GBP are going to gain. That is how they will pretend. So that those who have gone short will try to cover the short, and later on the players slide the market. So for that, there is no need to go into that of the fundamentals of GDP and also how exactly we can interpret, etc. Because those things might be of academic interest, but may not be relevant to the traders. That is what my humble opinion is. The traders need to know whether Euro and GBP are going to go up so that I can do a buy and sell trade or a sell and buy trade. And understanding the prime data release or understanding the various type of data which are going to be released from time to time, if we depend on that totally, after the GDP data release, if you talk about the non-farm payroll, after the non-farm payroll, you talk about the FOMC. That means you try to linger in ambiguity and try to linger with uncertainty. And with uncertainty, it is extremely difficult to take an appropriate trading decision. We can be a market commentator. We can continue to give a very good comment about the market or what has happened and why the GDP has come down or go up like this, it has improved, etc. And we can take the histogram and say that, okay, the GDP was like this and subsequently it has gone up. So US is really doing well. So there is a possibility that the interest rate might go up. All interpretation we can give. But as far as the trading is concerned, we need to have a very specific information whether I can do a buy and sell trade or a sell and buy trade. Long term is different from that of the short term. As I told you that you will be able to do the short term trade or a short period of trade for about 4-5 hours during this month end time. During the month end time, the players are expected to make the slide in the case of Euro and GBP, and GDP is simply act as an excuse for that. That is what my humble opinion is. Even if GDP data is less than expected, the players would have made the slide or give a different interpretation and slide. And today you come across the GDP data release, and tomorrow you find that not a significant data release is going to be there. Still, they are expected to make the slide tomorrow during that of the US session. So ultimately, you have to understand why the players are making such moves and how exactly they take appropriate decisions in making such moves. So only when you understand this, you will be able to really do wise trade and try to earn money from that other market. Simply talking about technicals and fundamentals might be of academic interest, but you need to read the intentions of the players from time to time, and for that following up the time frame of the market is very vital. And you find that 13 to 13:30 GMT is the gap time. You can see how exactly they are firming it up now, pretending as if it is going to rise again. So that those who have gone short for GDP data release, thinking that the market might come down, will immediately think that, oh, again, market is going up. So it is better to do the profit booking of the short selling. And also, they might turn long or they might go in for a scalping trade and waiting for a small firm up, etc. So various type of trading decisions might happen. But the players float the market in such a way, induce the traders to commit positions, and later on they make their intentional move. The intentional move is going to be the slide in the case of Euro and GBP for the month end, and that we'll be able to watch it during that of the US session and also tomorrow. So understand how vital the forecast is. Now these are all the trade calls I have given it. I was telling you that you can take sell positions in the case of Euro and GBP and also in the case of USD, Australian dollar, and take the buy position around that of 101.41 or slightly lower, and then they are expected to gain the levels in the case of USD. And tomorrow you will come across USD slowly gaining to 102, 103, etc. And then again next week, USDN is going to fall and come to 100 level. So keep that in mind, that it is the sentiment created only for the month end. GDP has acted as an instrument or acted as an excuse for the slide in the case of Euro and GBP during that of the month end. But subsequently, you will come across that Euro and GBP are expected to gain the levels during that of the next week. And also, USDN is expected to come down again to 100 level by next week. So you will be able to do the wide range swing trades during this particular time of 2 weeks, the last week of September and first week of October. So understand the market has to be read in relation to that of the time frame, not 15 minutes chart, 30 minutes chart, 1 hour chart, etc. And that will be really confusing you and continue to give the uncertainty to you. And what is more important is follow the time of the players, what the time frame the players are following, and the same time frame you follow it. The players follow the entire time frame using the GDP, GMT time frame. So you also follow the GMT time frame. Then you will be able to really understand how the players are making the moves in the market for each session. That is why I have given the session timings. And in the month of October, we'll come across the daylight saving system will be switched off by second, third weeks. And later on, you'll find the modifications with regard to the time frame. Then accordingly, you'll find the players are making the moves in the market. So understand the time the players follow. Understand that the data release are nothing but the excuses for the players to induce the traders to believe the moves happening in the market or in line with the of the fundamentals. But later on, they make some whips or moves in the market, and then people will say it is not due to fundamental, not due to technical, and it might be the unknown mystery. That is what happens. And many occasions you would have seen USDN making some whips or moves, GBP making some whips or moves. And again, this time, they will make some whips or moves in the case of Euro during the month of October, and also in the case of USDN. So watch for some of these extended stop-ins during the early part of October, and then try to commit your positions. You will be able to really earn very good money from that other market. So money making is our objective, but in the process, we lose tracking the market properly. Instead, we become very big analysts, and we continue to analyze the market and giving a lot of interpretation with regard to technicals and fundamentals, and expect the governments to follow us or call us as technicians or call us as a good analysts so that we'll be able to really contribute. But unfortunately, you find the governments have got a different agenda. So ultimately, what the players want is they want the analyst to be their mouthpiece. Knowingly or unknowingly, the analyst become their mouthpiece and continue to give enormous interpretation with regard to the markets. And later on, you find that the players have done their objective of earning money by misguiding the traders. So traders, the players create the market sentiments, the traders commit the positions, and later on, the players make some whips or moves or knee-jerk reactions in the market during month end and the new month beginning time, and then the traders lose the money, and that become the profit for the players again and again, which is happening. And unfortunately, many people do not realize it, and simply they have their own excuses that market is so big it cannot be manipulated, and that is what they try to use it in order to get convinced with regard to the surprises, and also they try to convince others, and invariably you find it is a psychosis. What happens is I develop the market fear because of uncertainty, and then later on I pass on that fear to other people, and simply by giving a shivering voice in our talk, and automatically which spread the uncertainty to that of the traders, and the traders all become very cautious, or they try to avoid committing positions, and later on the traders find there is a great opportunity. We would have taken the position and earned money, but when they miss it, then immediately they go in for a distress trade, and they try to enter into the market. After the rise, they buy. After the drop, they sell. So avoid doing it. Avoid being emotional and try to be very sensible. Understand the time frame followed by that of the players. Then you will find your trading will be really rewarding. So for that, the timings of the market are vital. So wait for the gap time to get over and then take a sell position near that of the high what they are set for the European session, for the US session before 14 GMT. And then you will find Euro and GBP started making the slide again. So if you follow these timings, and these timings are purposely made by the other players. I have explained many times why they choose to have these sort of timings. And now I don't have much time to explain all those things. And follow the timings of the players, then you'll be able to really understand they are making specific move every day on the same time frame. But how far, how come we have just ignored it or we are not understood it? The simple reason is that we are all being advised to follow the local time. So we follow the local time like the European time frame, the London time frame, New York time frame, Pacific time frame, etc. So invariably we think that the market is following that way. Then when the players are talking in Greek, we try to talk in English. So we don't find any understandable information from the other market. And we invariably get confused. We invariably become surprised when they make such moves. You know, for the GDP data they made the slide, they should have continued to make the slide. And why they are just doing the swing. And it might give that impression for you, okay, coming down a little bit is the support and going up is the resistance. So they are going to make the swings in this, and we'll try to do a sell and buy trade or a buy and sell trade or a scalping for 5-10 pips. That is what the traders do. And suddenly they make one-sided move. So they induce the traders to commit positions. So either in the form of a scalp trade or a swing trade or based on technicals or based on fundamental, anything you follow and try to commit the positions, they allow you to do the commitment of the positions during early part of the session. So that will take about 1.5 hours. From 13:30 to 15 GMT, they'll make the swing and induce the traders to commit positions. And later on, you find slowly they make the dip, and then towards late session, they make bigger dip. That might come to about 50 to 75 pips. So we need to understand how they are making the moves. Then accordingly, if you commit positions, you take the position during the early session, close the position during the late session, you will be able to have substantial profit. Instead, you take the position after the GDP data release, and later on during the gap time when they firm up, you get confused and just close your sell position. And later on rip, and I had done it in a hurry. I could have just allowed the sell to hold, and I had earned more money during further drop in the market. So invariably, the market swings induce the traders to develop the fear, and later on they repent about their decisions. And still, they don't have any other alternative method of following the market. So again and again, they depend on the fundamentals and technicals in modified form. That is why you come across innumerable analysts. They come out with it of various combinations of the parameters which are to be followed in order to take either the candlestick study or either any of those statistical studies. They try to say that, okay, it is working for me. Simple moving average or exponential moving average, you can just use it, or a parabolic curve or whatever it is. And they try to give different combination in order to understand. It is something like the blind people, 2-3 blind people trying to touch the elephant and trying to give an expressions about various parts they have touched it. Ultimately, we have to see the entire elephant as a single unit. Then only we'll be able to understand it is elephant and what are the behavior, and accordingly we will be able to either tame the animal even though it is bigger than us. So if there are any questions, I'm willing to answer to those questions. You can ask the questions in the question and answer window. And please understand, I am not criticizing any of the analysts with any bad intention or something like that. I am just trying to caution the traders, because knowingly or unknowingly, the traders get confused when they follow the technicals and fundamentals. And as a statistics professor, I've been following it for so many years and found that there are some limitations. And during my postdoctoral work, I just explored the possibility how to read the intentions of the players, with which I had come out I have come out with an algorithm because of that, and that I am using it to give the market predictions. So not that I'm great or something like that. I want the traders to understand that it is beyond, market is beyond technicals and fundamentals. That's what I want the traders to understand. If there are any questions, I'm willing to answer those questions. No question is coming forward. So we have seen the trade calls which was given before that of the US GDP data release. Later on, I just done the results of the trades and also the review. And in the trades, I given the levels for you to exit. And these things could be seen during the late US session. As I explained, the early part, they just swing, and mid-session they handle the crosses, and later part they will make their intentional move. At the time you will be able to book profit around those recommended level. These are all the mathematically derived levels. So around that you have to watch and then close the position with a profit. So I take this opportunity to thank FX Street and also you people for your kind presence and also patient listening. So please try to objectively analyze about the market and try to see what are the methods by which we can get rid of the market fear by having a perfect understanding of the market, the intentions of the players. Thereby, you will not have any ambiguity, you will not get the market fear, and your trading become very sensible. Wish you all happy trading. I will come tomorrow again during the Asian session, my live market analysis webinar, and try to review the forecast, what I've given it for this week. And also Monday, I'll give you the forecast for the next week. Wish you all happy trading. Enjoy trading and make money.